Hello, I'm Hayley Atkin, and I'm joined today by Florian Ielpo as we discuss the key investment themes for the coming quarter. Florian, how has the macroeconomic environment evolved since last quarter?
One of the main changes we've had over the past quarter was the fact that we've seen an increased visibility on the central bank side. Across the many meetings we've had over the quarter, all central banks communicating, saying like growth is on track, inflation's coming, which suits very well the assessment we have of the macro environment, and that increased, if you want, our ability to foresee the next steps for the central banks. Having said that, two other things have been changing. One is that we've lost the synchronicity of growth that was so dear to financial markets, that explains so much of the equity rally we've had last year, and that seems to be gone. Growth is slowing down slightly, but unevenly. It's probably stronger in the Eurozone than in the US, for example. And that contributed to creating an increased level of uncertainty to which financial markets were not used, which explains also that volatility today remains higher than in the past.
With this in mind, what are the key themes for the coming quarter?
Our key themes are basically two from the past, one new. The two from the past is that we still believe in this growth story. We still think that growth remains good across the world, even though it's decelerating. That should probably push investors a bit more towards equities. The second element is the inflation story. We still think that we see this transition from reflation, that is normalization of inflation, to inflation per se, that is inflation figures above what central banks are expecting from it. The missing link being wage growth, but we're seeing a lot of news around saying that wage growth is probably on the rise. The last thing, the new element, I would say, is the fact that we've seen risks in the past, and that we're seeing uncertainty, a rise in uncertainty. And that's a very different animal, I would say, that requires a lot of dynamic risk management, which is what we're currently relying on at the moment.
And finally, how are you positioning our strategies against this backdrop?
We think that uncertainty is the key word for the quarter. Okay, so that explains that in terms of positioning, we have, say, one of the most neutral positioning we've had in the past, I would say. Still, we have a slight overweight for equities because we are still believers of this growth story. Also, we are defensive on the fixed income side. We think that as inflation will emerge, that will push rates higher. That will have also an impact on credit markets. So we have an underweight for both credit bonds and underweight for government bonds. But overall, this positioning remains quite small as a reflection of the uncertainty we are perceiving for the moment.
Thank you, Florian. For any more information on our investment views, please visit our website, Unigestion.com.